Hi, and welcome to my fall market update. I'm Erica, and I'm in the San Francisco East Bay, specifically the Danville, Pleasanton, San Ramon, Livermore area, also known as the Tri-Valley. And I want to take a few minutes just to give you some data points and just to help your understanding of the market and what's happening, and just try and simplify things a little bit for you. So I've got some slides for you that we're going to go through, and I welcome your questions, your comments, whatever you have for me. But let's go ahead and jump in. All right, I'm going to share my screen with you, and here we go. Okay. All right. So fall market update. So as you probably know, we are in some historically unique market conditions. At the moment, we have some pretty drastic rising inflation, and this is by design to slow down the economy that needed some pushing forward coming out of the pandemic. So interest rates are on the rise, and mortgage rates historically tend to mirror interest rates. And unfortunately, we've seen the fastest rise in 50 years. So mortgage rates have gone up faster in the last few months than they have in the last 50 years. So it's a big spike. We're also seeing a cooling in home prices from an all-time high. So we're going to talk about all this, all the demand, what was happening from 2020 to early 2022. And then I want to spend a few minutes talking about what does all of this mean for you with your equity, if you're thinking of buying and or selling, if you're a cash buyer versus if you need a mortgage. All right, so let's first take a look at mortgage rates and what's going on there. All right. So if you have seen, heard, watched the news to any extent, recently, mortgage rates have spiked, okay? And again, the 6.7%, this is a national average, so you would see variations of this if you were researching mortgage rates. But for a national average, where we are for a 30-year fixed rate is 6.7 to 7 points or so. You can see from this where mortgage rates have gone from 2018. I know these dates are hard to see, but from 2018 through today, this is what we're seeing. Now, of course, the next question is, where are they going? And this is what the projection is. So they're projected after some time to drop. Okay, in 2023, they're going to continue to go up, and then hopefully in 2023, if these projections are correct, we will see them start to come down. Now, why is that? And that has to do with a recession, being in a recession. And, there's been talk about a recession for a while, and I think it's well accepted that we are in a recession. So what is a recession? Just so we're clear, it's a significant decline in economic activity spread across the economy, lasting more than a few months. So what happens historically to mortgage rates and home prices in a recession? So here's what historically has happened with home prices. I know there's been a lot of talk and some headlines about a crashing real estate market, but we just don't have evidence to support that. So historically, we see an increase in home prices over the last 6 recessions, with a few. So 91 was a minor exception to that. 2008, of course, was a huge exception to that. And it's always important to remember that in 2008, the housing market was the cause of the economic crisis because of all the mortgage issues going on back then. So today, the housing market is not the cause of recession. It's the economy at large that is shifting around and trying to normalize. And so, of course, the housing market is getting swept up and impacted by that. But we don't expect any sort of market crash for this recession. It's simply more of a rebalancing. So one more graph here, just another graph of showing what mortgage rates have done over the last several years. So we see kind of the ups and downs, the normalized market 2016 through 2019, and of course, 2020, 2021, we're seeing this massive drop, historically low interest rate, or excuse me, mortgage rates. And we all know that was caused by the pandemic. And of course, we're in recovery mode now here. So we've seen this massive spike, and you can really see the spike in this graph as well. And once again, we see projected softening of those mortgage rates. Now, this is I've offered some pretty simple data here. There's lots more research that you can find here. And I'm happy to just reach out to me if you're interested in getting these links. I'd be happy to send them to you, and you can do a deep dive. I just wanted to offer some basics and some patterns that we're seeing here. So the next thing that we're going to look at here are home prices. So what is happening with home prices through the same period of time? So this shouldn't surprise you either. 10 years ago, home prices were up. We were recovering from that 2008 housing crisis. Then we had just kind of a normalized, homes were just holding steady really between 2015 and 2019. And then of course we saw the dip, and then a spike. So, and these home prices were of course being driven by the pandemic, by this overwhelming demand of so many people now who could work at home, wanting more space, wanting more for their families, wanting to, extra bedrooms to work from home, and very low inventory. So a lot of people did not want to move. They were afraid if they sold, they wouldn't be able to buy. So overwhelming demand, low inventory, which is what was causing these huge spikes. Okay, here is a related graph. So existing home sales here in the East Bay, the vast majority of homes are existing homes. We have some new builds here or there, but not enough to really consider the data. But you can see here in existing home sales, again, we can see this drop in early 2020. That's when the real estate market essentially stopped because of the pandemic. And in real estate, we couldn't figure out quite how to sell a house when we couldn't see people face to face. But you can see this massive recovery. That problem got solved pretty quickly, especially with the demand that was going on, and home sales skyrocketed. Okay, so lots more here as well. Again, I just wanted to kind of lay this foundation so that we can talk more importantly about what does all this mean for you. First of all, if you've been a homeowner since 2019 or before, you have great equity in your home. And this is really good news for you as a homeowner. Homeownership is one of the most stabilizing financial pieces of your financial puzzle. And chances are you have some real good equity in your home based on those graphs I just showed you, which is excellent. So the big question is now, if you're thinking or needing to buy or sell in the near future, what does all this mean for you? Okay, so right now, essentially, we have mortgage rates that are on the rise. We have home prices that are softening. So if you need to buy in the near future and you are a cash buyer, the advice is to wait it out, because home prices are going to cool. As long as interest rates and mortgage rates are climbing, then prices will come down. So if you are a cash buyer, I would recommend sitting it out a while longer. Let prices come down a little further. Now, if you require a mortgage, if you're going to sell and then buy, that's a little more complicated. And my best advice for you is to reach out. I can get you in touch with an excellent lender who can provide some really great help for you and help you solve that problem to see what financially makes sense for you, because that's really what it's about. what's going to make sense. Mortgages and affordability really is a puzzle with a lot of different pieces. And a really good lender is going to help you put the pieces of that puzzle together and figure out, based on the current mortgage you have and your affordability moving forward, what you're looking to buy. Let's get all those pieces put together, okay? But the takeaway is, it's my hope to get you away from the headlines and really just to understand that as interest rates go up, prices come down. But beware, because with those projections of interest rates coming down, prices will then go up again. Okay, this is an inverse relationship that we've seen historically over time, and this is how markets and cycles work. Okay, so if I can be of assistance to you, if you would like me to get you in touch with a lender to help you solve your financial puzzle and figure out how to make your next move happen, please let me know. The easiest way to reach out to me is simply to call area code 510-331-0327. And I'm more than happy to get that moving for you. Okay, hope this was helpful. See you next time.